Nothing in this podcast is intended as investment advice, and the people in this podcast may hold positions in the stocks they talk about. Do not buy any investment based solely on a tip or recommendation. Please do your own research.
Hello and welcome to the Midweek Takeaway. Joined by Mark Routh, CEO of Prospex Energy. Welcome back, Mark.
Hello. Thanks for having a chat with me today.
No problem. So we just saw the Q3 2023 operational update for Selva Field in Italy, where over 5.6 million standard cubic meters of gas has been produced and sold to BP Gas Marketing. The PM1 gas facility began production on July the 4th, 2023, and is currently running at around 62,000 SCM per day, with aims to increase this to 80,000. The produced gas is sold to BP Gas Marketing, with prices recently increasing, resulting in a gross revenue of 1.937 million for the quarter, and 716,717 net to Prospex. You emphasise the achievement of stable production rates and cash flows, highlighting the company's strategy to become a diversified energy producer in lower risk onshore European markets, supporting the European energy sector with assets in Italy and Spain. All sounds like great progress, Mark.
Yes, it is. I mean, those numbers are all in the RNS, and it has to be said that we have to coordinate our releases to the market with the operator. We can't go out before they do, and we can't have different numbers. These numbers are all correct. We get them every week, and we get daily reports. So it's very pleasing to be able to report on the successful production that we've got.
So, Mark, that's impressive stuff for the quarter anyways. Over 700,000 euros of revenue. And by the looks of the RNS, from what you've said, they're hoping to move from 62,000, I think it was, to 80,000 per day. And also, obviously, you're going to have the uplift in the price, obviously, because now the spot price is now 53. So we can see that Pexon or Prospect are going to have probably €1 million per quarter. Is it fair to say that, or somewhere in that region?
Somewhere in that region, if the spot price remains above 50 euros per megawatt hour, which by all accounts, it looks like it's going to do that, especially as we go into the winter.
Yeah, and what is it? What's the gas price looking like going forward?
Well, the forward curve right through to the end of 2024 remains above 50 euros per megawatt hour. And it's up to the early part of the third quarter, we were getting around 30 euros per megawatt hour for the gas. The great thing is that we're converting those gas molecules into euros very effectively at the end of each month with BP Gas Marketing. You couldn't have asked for a blue chip gas buyer to buy our gas.
What do you think the probability is that we have another winter in terms of gas prices like we had last year? Or do you think Europe has sorted itself out in terms of what it needs for gas going forward?
Yeah, that's pretty hard to judge because you've got the geopolitical situation being in a lot of turmoil at the moment, with not only the war in Ukraine, but you've got now the war in Israel, which is upsetting the market. But on the other hand, people still need to have gas when the wind doesn't blow and the sun doesn't shine. So we've got to help this transition into renewable energy. And gas is the way to go, as I've said often before. But I think that we will need to have the gas flowing, and LNG can't fill all of the requirements for Europe. So I think there could be an uptick in the price, but I'm not going to predict that's going to happen. The ICE forward curve, which is referenced in the RNS, is a pretty reliable indicator for the TTF forward curve gas prices. And like I said, above 50 for the whole of the calendar year 2024 is quite impressive.
So in terms of this whole project, I mean, just so people understand, just set it out. I mean, it says in the RNS that you're starting to permit and go for the permits for the other 3 places that you're going to be drilling. I think 2 of them already, it's assumed that the gas is in situ, and the other one is more of an exploration target. So give us an idea of how you see that progressing and what it means to Prospect Energy.
Well, the first 2 wells will be Selva North and Selva South. Those are contingent resources, and that means that there has been a well drilled on the structure already and gas has been proven to surface. It's contingent because there's no development plan in place. So we will drill 2 wells into those structures, actually from the same well pad, because to save costs, we're going to drill 2 deviated wells into those structures, hook them up with a pipeline which will relate to the existing facility at Selva Malvezzi at Podea-Mayo-1, where the producing gas well is now. So we will expand that facility to receive that gas and get it on production as soon as possible. And you mentioned the third prospect, which is a prospect categorized East Selva as prospective resources because it hasn't been drilled yet. It's a structure which we've identified on the seismic. We're doing as much subsurface work as we can to de-risk that project, and we hope to be drilling East Selva third in the well plan that we are when we get the rig mobilized on the concession.
And what is the hope, Mark, of the company in terms of funding these drills?
Well, it depends a lot on when the wells do get drilled and permitted. And the permitting process does take time. It's looking like the back end of 2024 that we'll get the actual wells drilled and onto production. By that time, with the cash flows that we talked about just earlier by quarter, it looks like the joint venture together will have enough cash to drill these wells. So that is our hope. And with the gas price doing what it's doing, that would be the best outcome.
Okay, very good. So though it's hard for you to comment on, obviously, the share price, we're looking at a company now going, looking forward at 4 million euros or more of revenue, and also your assets in Spain. How do you feel that the company is being valued on the market at the moment?
Well, I get accused of saying I would say that, wouldn't I? But, of course, I do feel the company is undervalued. We have got a vanishingly small amount of debt, which is going to probably get converted into, the loan notes are going to be converted in at the end of December and March when the next 3 payments are due. Those loan notes holders are likely to want to convert at 5.5p. We're trading at just around 7 at the moment. And I think that with the debt going away and the income from 2 stable producing nations, this company should go places and can grow organically from using the drill bit from the assets it has. And that is our plan at the moment.
Yeah, I mean, if you're talking about, I presume you're talking about having revenues at this gas price of more than 4 million for each one of the 2 wells that that the gas is there. So this would give you a revenue of 12 million euros a year. And then obviously the other one is a bit more speculative, but ultimately you obviously believe there's a very good chance there's going to be gas there. If that was the case, you would have 16 million euros of revenue a year. So, and that's probably only 2 years away at maximum, I would imagine, in terms of the way that things would work out.
Yeah, that would be nice. I mean, the North and South Selva, not quite as large as the existing Selva field, but the production rates are going to be up there at the similar amount. It just might last a year or 2 less on the actual profile. But yeah, if East Selva comes in as well, that's the largest structure that we've mapped on the concession. So yeah, we are talking multiples of those numbers in production come 2025, we hope. And that's the plan. It's a good organic growth story.
Yeah. So the PM1 gas, which is obviously supplied to BP Gas Marketing, I believe that's under an 18-month supply agreement. What happens, Mark, at the end of that 18 months? Will it be negotiated potentially further, or can you tell us a bit more about that potentially?
Yeah, the plan would be to renegotiate that further. When that gas supply contract was renegotiated, Po Valley had negotiations with 4 different gas marketing groups, and BP came up with the most commercial, the best offer for the joint venture, and that's who we went with. So I think the same process would kick over again toward the end of the 18-month process, but I'm confident that there are enough people who want to buy this gas out there that we'll get a good deal.
All sounds very good and promising as we move forward. And I mean, it hasn't gone away, the security of energy that is required for Europe. And, we're talking about Spain and Italy here in 2 countries. So I think your prospects look good.
Yeah.
Use the pun.
Exactly.
Very good. Well, on that note, we'll say Mark Routh, CEO of Prospex Energy. Thanks very much for your time.
Thank you.
This podcast was brought to you by Roast PR Limited. If you would like to appear on a future episode of The Sunday Roast, please email admin@thesundayroast.net.